Hey folks, Dan Frio here, the rate update. Today is August 19th, 2021. Got some good news, we think maybe from the Fed. And then we're going to talk about how refinancing might help you save a bunch of money or maybe pay off your house a little bit quicker. So don't go away, we'll be right back. Okay, so I'm getting a lot of grief from you guys out there saying, Dan, the Federal Reserve is this and that and this and that. Guys, I'm just the messenger. I'm trying to give you guys the facts so you can make an educated decision on, is it a good time to buy? Is it the right time to refinance? Maybe pay off some of those high interest rate credit cards with the rates that are, you can get on mortgage rates today before they start going up. They're gonna go up, okay? It is the biggest piece there is when. And I'm saying it's gonna be the first quarter of 2022. So watch this. I got a couple people agreeing with me, then we'll be right back.
So inflation, certainly, I think there may be a little bit more work to do on the job front before they get a plurality of the FOMC to agree with Mr. Rosengren. Certainly the labor market is the area that we're watching most closely. And while we have created a lot of new jobs, we still have a number of people who are not working today that were working when the pandemic started. Labor force participation is still more than 1% lower than it was prior to the pandemic. Now, we are expecting that to improve in the coming months as we have back to school, as we have the expiration of support for the unemployed, coming up. And that should motivate a lot more people to come back and accept the immense number of job openings that there are in the American economy. My own view is that September's meeting might be a little too soon, but the announcement will almost certainly come before the end of the year.
Okay, and in terms of the execution, how is that going to play out in terms of tapering MBSs, tapering Treasury buying?
Martin, the Fed has said that they will probably taper both sides of their portfolio proportionally. I don't know that they'll favor one or the other, but I will say that I expect them to taper their asset purchases fairly quickly and get to what I would call net zero for their balance sheet by the middle of the year. There are many signs of immense excess liquidity in the financial system, everything from the overnight reverse repurchase agreement program that the Fed runs to the amount of corporate cash that is sitting idle on corporation balance sheets. All of this points to the fact that the tapering the QE has been more than sufficient, and leaving too much of that liquidity out for too long will create either inflation for goods or for assets, neither one of which is desirable.
Speaking of which, Carl, you raise an excellent point on mortgage-backed securities. Are they going to signal any winding down of that $40 billion program?
I think they certainly have to. Housing markets around the world, not just here in the United States, have been especially strong. Mortgage rates are low. There's a lot of capital looking for investment opportunities. Certainly the underwriting standards, which were such a big problem here in 2007, have been tightened, but still I think the Fed would like to dissociate any responsibility for creating another housing boom so soon after we cleaned the last one up.
Okay, so as you can see from even economists, they're kind of agreeing with me, the Fed's going to wait and watch employment numbers. They basically kick the can. They're actually coming out and saying, we don't care about inflation right now. We don't. We think it's transitory. It's gonna run its course. I am a proponent of that as well. And they're saying, we're going to let this run its course, but we're focusing on 1 million jobs created a month for probably 3 to 4 months. So let's say last month we missed it a little bit, but we were pretty close. So let's say in August we did it, September, October, November-ish is when we're going to get the Fed to say, okay, we're there. Now, what we're saying is these 4 months have to be 1 million people getting jobs each month, or the number, it's going to postpone things a little bit more. I'm saying in its best case scenario, we're not looking for the Fed to come in and really even put it in stone that we're going to start tapering. Even when they do it in December, it won't take effect till January. So Q1 of 2022. Okay, so we're on track of what I've been anticipating with what the Fed's going to do. And why the Fed is an important structure here is you guys always hear me say the Fed has no control over the mortgage rate. What they do is they are controlling how much bonds they're buying. And I'm going to get there in a minute when we discuss what's happening in today's rates. But I had a conversation with a young couple this morning, and I wanted to share this with you. They took out a loan, or they have a loan that they're looking to refinance, and they still owe $275,000. Let me take that back. They owed, or their loan amount was $275,000 5 years ago when they took out the loan. So I ran an amortization schedule to see, okay, how much should their payoff be right now? So if I run this, it's $275,000. They were on a 30-year term at 4.875. Okay. If you look at the numbers after 5 years where they are right now, they owe $252,000. All right. So how do we figure out, is there a savings here or not? Well, go to my website, therateupdate.com, and scroll over here and hit Refinance and Refinance Calculator, and this is going to pop up. So what I did is I plugged in, they owe $275,000. That's what their loan was at that time. 4.875 was the rate, 30-year term, and they closed in 2010. So now we extracted their payoff of $252. It's right down here. And we move it over to here. This is the new loan amount. And we have about $2,000 in costs. And we put that down here. But what I did is they really didn't want to go back to a 30-year term. So I'm like, okay, let's just equal what you're paying now. So you have 25 years left, which is 300 months. So I did that. The rate on their loan is 3.125. What does this do for them? Well, if you look over here, it's saving them almost $250 a month. They're not going backwards. They have the same amount or same term left on their loan, so they're not extending the term out at all, and they're now being able to reduce their monthly payment by $244 a month. Guys, that's a car payment, okay? But let's do one more better. Let's say, well, wonder what we could do on a 20-year term. Okay, and the rate on that right now is 2.625. So where does that put it? They still save $100 a month. Now they're cutting off 5 years of their mortgage, and they're reducing their payment by $100 a month. Might not sound like much, the $100 a month, but they're cutting 5 years off of their payment. Well, let's go back. What's their payment right now? $1,455. Okay, so what's 5 years? Well, that's 60 payments times $1,455 equals $87,000 in savings. So guys, I get it where I always preach to you guys, go out there and try to find the best rate, the best terms, the best everything, the best this and that. There's a lot of times that lenders are not approving loans. I've had 2 or 3 people today that we got pre-approved that went to their credit unions and got denied. I still can't figure out why, but they did. So if you're looking into refinancing, this might be a good parameters for you at least to say, that does make sense, or let me at least look into it. Other ideas that give you for, when you should refinance, maybe you have a lot of debt right now that you incurred over the past year. You were laid off for a little bit of time, had to live on credit cards. Maybe those home improvements that you put off, emergency funds, in case the new virus kicks in and you get laid off for a couple more months, you have some spending cash there. Educational bills. Student loan debt is now at $1.6 trillion. Okay, it's bonkers. So just some ideas on what you might want to look at in refinancing. So I just thought I would throw that out there for today. So what's going on in the MBS market? That's what you're here for. Well, the MBS market ended up 5. I'll take it all day long. I'm still amazed on what's going on why the MBS market is strengthening when, the employment numbers are coming in okay, but there's that, the issues we have in the Middle East again. And then you have the new virus starting to rear its ugly head, and so much more coming out there. I'll take this all day long. So why we follow this number right here? This is what's happening in the mortgage-backed securities market. It's a bond that trades on Wall Street. You might even have it in one of your investments. This is what's happening to the price of the bond. What happens when this number goes up? When these numbers go up, your rates come down. Okay? Look at that run. Okay? Over here is when we had a debacle about a week ago, and things are starting to stabilize again. I still think we're going to trade up to about here but we're trading right in here, and I'm fine with that. We're hitting this new Fibonacci level right here, and it's creating some resistance, but I'm hoping we close over that today or tomorrow, because that'll bring us, now the next point of entry would be 101.6. So just all I want you to take out of this is we're in a nice little trajectory right now of mortgage rates getting a little bit better. So we're not locking in anybody. We probably locked you in yesterday before the crash, and anybody we didn't lock, we're floating into, because I think we're going to have a nice little rally. Maybe not a big rally, but we should start rallying from here up through the end of the next week or two. Okay, so that's what's going on there. The economic calendar, let's see. This is the intraday chart. What happened today? We were all over the map. Okay, up, down, up, down, up, down. But at the end of the day, we were still up 5. So I will take that. The next thing I want to look at is the economic calendar. What came in today? Well, there were some things that came in, and we're going to pop that up right here. Housing's right here. Initial jobless claims. We got a good number, a really good number. I don't think it's enough to really spur the Fed, because we're only talking 300,000, so that's not that much. Philly marketing survey, nothing there. And the Chinese rate decision tomorrow is going to have no impact on what rates do tomorrow or over the weekend. So that's some great news there. So what's going on with mortgage rates? This is a post that I post every day from Black Knight. They survey mortgage lenders all over the country. These are not my rates. To get my rates, I need you to call or email or set up an appointment with us so we can get your specific numbers, plug it in, and tell you exactly what rate you qualify for. But Black Knight issues this report every day, giving us 30-year rates, where the average rate is through the country. Right now, 30-year conforming, jumbo, FHA, and VA. These numbers are right here. Okay, and then I want to go over to these 3 columns right here. 1-day delta, 7-day delta, and 4-week delta. Delta means change. Then let's break down right here, 2 basis points. What's that really mean? Well, in numeric form, it's 0.02. So basically, all these numbers you can basically say are 0. All these numbers are 0, and all these numbers are 0. To make a short of this, we're basically right where we were a month ago. I will take that, especially with all the stuff going on today. So that is all I got for today. I just want to thank you guys for watching my video. And if you're out there, you're looking to buy a house, refinance, or even reverse mortgages. We got several reverse mortgage applications today, and I don't even market reverse mortgages, but we do those. So if you're in any mortgage need on a residential property, please reach out to us. If you're in a forbearance, I really need you to reach out to us. And we're not getting the phone calls on forbearances that I thought we would. So if you know anybody that's in forbearance, please ask them, pull your head out of the sand, and please look at working with somebody to help give you an exit strategy on that. So the best way to reach out to me and my team, or to find out more about us and what we do, hold on, I just got stuck here in my web search, is to go to therateupdate.com. It is right here. You can give us a call at 844-775-LOAN or apply. That's all you got to do. Click this. It'll take you 5 minutes, maybe 10 at tops. And you're going to fill out an application. All of a sudden, it'll show up in my pipeline. I'll get working on it. I'll review your application and get in touch with you probably within an hour. If it's during office hours, if it's after hours, I get a hold of you first thing in the morning. What most people are doing, and we have a ton of these, and every day we're getting more and more and more and more. So I got about 10 loan officers on this system right now to answer any and all the questions you have. Is just schedule a meeting. Okay, most people do it by Zoom, because Zoom, we can share our screen with you. You can share it with us. We can look over your financials, your mortgage statement, and everything. You just pick a day and time that fits your need and let us know how you want to do it, Zoom or phone call, and then just expect that day, at that time, that we will be reaching out to you to answer all the questions that you have. So that's it for today. God bless, guys. Thank you so much for watching. Please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you tomorrow. Take care. Bye-bye.